Good afternoon to you. Hope you're having a great day so far. Welcome to the marketplace. My name is Darryl Kwao. Coming up, World Bank and IMF finalized work on Ghana's debt sustainability analysis, which could push Ghana into the dreaded debt distress status. We'll tell you more. Also coming up this afternoon, President Akufo-Addo appoints Dr. Mustafa Abdul Hamid as the Chief Executive of the National Petroleum Authority. We will discuss the work cut out for him. Plus, the Ghana National Petroleum Corporation commits to sharing needed data with the Ghana Maritime Authority as a means of securing a sustainable maritime space.
We do this by sharing derived bathymetry data with the Working Committee. GNPC's data coverage over Ghana's maritime space is quite vast and it's always growing.
Details coming up in this half hour of business news. We will be right back after this break. In our first story, the World Bank has finalized work on Ghana's debt sustainability analysis report. This assessment is to establish whether the country has reached the stage where it may struggle to repay its debt on time. George Yaffe brings us the details.
Debt sustainability analysis is done by the World Bank and the IMF to establish the ability of a member country to pay back its debt on time. Call it a stress test, and you might not be wrong. The exercise looks at the country's ability to meet its debt obligations when they are hit by some challenges that affect its revenue. It assesses each country on some 7 indicators. Key among them is whether, in the case of Ghana, we are raising enough revenue to service our debt. The debt sustainability analysis has become important following the transmission from a developing country to a low middle income status. Ghana's debt stock has reached 305 billion Ghana cedis ending March this year. The country is now classified as high risk of debt distress at its last review by the IMF and the World Bank. And there are fears that with our situation getting worse, Ghana could soon drop into that category after the review is completed. But government, on the other hand, has argued that despite the spike in the debt stock, which was related to COVID-19 expenditure and the banking sector cleanup, it believes that it has done enough to ensure that Ghana doesn't get into that bracket of a debt distressed country. Also, the expansion of the economy and revenue picking up strongly, it expects the situation to improve in the coming months. Getting into that bracket of a debt distressed country might not be good for Ghana's cost of borrowing and even private businesses in Ghana.
And we will be learning more in the coming days. Meanwhile, government last Thursday secured 1.86 billion cedis from the sale of the 7-year bond, which replaced the maturing 5-year bond. We have an infographic to show you. Now, the long-term bond was marginally oversubscribed by 3.3%. At the same time, the interest cost of the debt instrument went down by 6.4% to 18.10%. Saving government some significant interest payment. Now, the market has been favorably conditioned in the past few weeks with stronger demand and lower interest rate expectations. This has triggered renewed investor interest in the domestic market, particularly Treasury bills. Now, analysts have attributed the success of the sale of the 7-year bond as critical to government's quest to reduce the cost of servicing loans and lengthening the maturing period of outstanding debt, as well as easing the refinancing pressure. For now, it's unclear whether non-resident or foreign participation was significant, and government intends borrowing 2 billion cedis between June and August this year. Let's discuss this further. Joining me is CEO of Republic Bank Securities, called Saki, with some analysis on this. Good afternoon to you. Thanks for your time. And it's great to have you on the program call. Just your reaction to this news that the 7-year bond was oversubscribed. Can you hear me? I'm not too sure if Kosaki can hear me. I guess we are working. To fix the situation there. But let me just try one more time. Let's hope that technology is favorable one more time. Can you hear me?
Hello, Daryl. Can you hear me?
Yes, I can hear you. So just your quick reaction to this news about the 7-year...
I can hear you. Can you hear me?
I can hear you loud and clear. Your reaction to the news that our bonds, the 7-year bond was oversubscribed?
Sure. I think it was expected because coming back from COVID and all that happened in the financial space, everyone is looking for a safe haven to invest. And government is one of the safest places.
Okay, we're having challenges connecting with a call. We have connection problems this afternoon. Apologies for that. We'll fix that and get back to him as we discuss government securing 1.86 billion Ghana cedis from the domestic market for a 7-year bond sale. As we do that, we want to turn attention to some other news that is coming through to us this afternoon. President Akufo-Addo appointing Dr. Mustafa Abdul Hamid as Chief Executive of the National Petroleum Authority. We've got that to show you. This ends months of speculations linking him to one of the most prestigious state-owned enterprises in Ghana. His appointment takes effect from the 1st of July 2021. In a letter dated 17th of June 2021, Dr. Abdul Hamid has been charged to champion the vision and mission of the NPA, which is to regulate, oversee, and monitor downstream industry, petroleum industry in Ghana for efficiency, growth, and stakeholder satisfaction. He is expected to reposition the downstream petroleum regulator in order to address the high revenue leakages in the sector. He's taken over from Hassan Tampoli, who is now the Member of Parliament for Gushegu in the Northern Region. Dr. Hamid served as a spokesperson to then candidate Akufo-Addo from 2008 to 2017 when he became the Information Minister and Presidential Spokesperson. Prior to that, he served as the Executive Director of the Dankwa Institute and a lecturer at the University of Cape Coast. In the course of the program, I will be speaking with Fitz Moses, who is a researcher with the IES, for his thoughts on this appointment and the work cut out for Mustafa Hamid. But I want to go back to our earlier story about government last Thursday securing 1.86 billion cedis from the sale of a 7-year bond. Back on the line with us this time, hopefully we can get a better connection to him, is called Saki, who is with Republic Bank Security. So, Cole, I was just picking your reaction to news that we secured 1.86 billion cedis from that 7-year bond sale. How's that?
Hi, Daryl. I think I can hear you loud and clear now. I think generally the markets having seen some recent downward spirals in terms of the yield, it was expected that this 7-year issuance would clear at a rate relatively lower than the previous ones. I think the last one was over 19%. So 1.86 billion, and clearing at 18.1% was highly anticipated. You put that side by side with how the equities market is performing, and then you notice that was something that was coming because the equities market is on the upward trajectory, and the fixed income market or the yield in the government bond space is trending downward. So it was highly anticipated, and investors also prepared themselves adequately to meet such a yield. Yeah.
Okay, so just to enlighten our audience, how did the fall in inflation rate and the reduction in the policy rates affect the outcome of this bond sale?
Okay, so the fall in the inflation rate, and then you know that the MPC rate had also gone down before the inflation rate was announced. It all indicated the trajectory or the intent of market forces, especially on the regulator side, to realign rates. Now, we know that several rates along the fixed income spectrum have fallen more than 50 basis points where they previously used to be. So it was just an indication of the direction where rates are supposed to be going towards. And the inflation bit, of course, also shows that things are not as rising, the prices are not rising as high as they used to previously. So some kind of contraction in terms of rates all over is what was brought to bear with the decline in the inflation rate and then, of course, the monetary policy rate as well.
Okay, and we ran a story earlier about our debt situation. Now, when you speak with analysts, they talk about the fact that we cannot stop borrowing at this point, and they advise that we rather turn to the domestic market. And looking at what has happened, it looks really promising. How does that help our debt situation, and how does this outcome also affect our economy positively?
Well, looking inwardly to borrow is, of course, better than going out in some ways. Why is this so? This is because more or less the capital will remain in the economy. There won't be much capital flight. For instance, when we have a chunk of investors coming from outside, that they would definitely take their money back out of the country. But essentially, on my side, it creates quite an active market for us to deepen the capital market in the country, and it also affords investors the opportunity to, have several options. Before several financial institutions were closed down, there were fixed deposit investments available, and that came with a bit of risk. But right now that there's opportunity for everyone to be able to participate or partake in government offerings, because they would look down here and then borrow more locally. It creates the opportunity for investors to also consider keeping their money here, and in the end, the economy is better off for it.
All right. So this was a domestic. This money was secured from the domestic market, but it was open to everyone. I mean, foreigners as well. I just wanted to point that out. My last question to you. So what's the anticipation on the market right now, seeing how things have turned out?
Okay. We are in a very risk-averse space.
Right.
6 or maybe 7 to 8 out of 10 investors will prefer to look at very safe and secure investments. And that means that people would have to now vary or try and analyze their returns, because the returns you are going to get on the fixed income market will be relatively lower than you used to have it before. Okay. So if you cannot take as much risk in terms of getting onto the equities market or the stock market, then you would have to be ready to expect and receive lower rates. But of course, the opportunity for you as an investor also to try and explore the equities market is available, and you get good advice, you can get some good returns as well.
Call Saki, Chief Executive of Republic Bank Securities. Thanks so much for your time. Hope to speak with you another time on the marketplace. And so that's it. Government securing close to 2 billion cedis from the domestic market in a 7-year bond sale. We are turning attention now to the story I hinted you about, the president appointing Dr. Mustafa Abdul Hamid as Chief Executive of the National Petroleum Authority, as indicated, is ending months of speculations linking him to one of the most prestigious state-owned enterprises in Ghana. His appointment takes effect from the 1st of July. And we've got a letter dated 17th of June from the president, which charges him to champion the vision and mission of the NPA, which is to regulate, oversee, and monitor the petroleum downstream industry in Ghana for efficiency, growth, and stakeholder satisfaction. We want to speak right now to Fitz Moses, who is a researcher with the IES. His reactions to this news of Mustafa Hamid taking over the position of MPA boss. If you can hear me, Fitz, how's this news coming to you at the IES?
Dara, thank you for having me. We think it's a good news. I mean, we want to congratulate Dr. Hamid for the appointment first. And we think that his coming on board would help the state agency that has been without leadership for quite some time now. But then again, there are several issues that coming to NPA would have to be addressed by Dr. Hamid. Now, we know already the issues surrounding the cylinder recirculation model and how the LPG Marketers Association had come out earlier to view their opinions on how the whole model was running and how the policy implementation has been. Again, also, there have been concerns raised by the LPG Marketers Association on the issuance of certificates and licenses for some or other operating or other LPG outlets to be operationalized in the country. We think that these are things that you have to reconsider or will be forced to reconsider. Again, we've spoken about the issue of taxes or levies or margins that have been increased on petroleum prices. Now, usually the UPPF, which is largely handled by UMPA, is one of the things that Dr. Hamid will have to reconsider government's position on them. We saw an increment in about 3% on UPPF. I think these are things that he can also look at, particularly in the time where international factors are causing prices on the local markets to continue to increase. Again, to look at the fact that we have seen a growing trend in fuel smuggling in the country, which of course is leading to a loss of revenue to Ghanaians.
Okay, it looks like we may have lost Fitz there for a moment. But there you see in your shots the man who is going to be taking over the National Petroleum Authority in the person of Mustafa Hamid. He served as spokesperson to then the candidate Akufo-Addo from 2008 until 2017 when he became the information minister and presidential spokesperson. Prior to that, he served as the executive director of the Dankwa Institute and a lecturer at the University of Cape Coast. And so we'll be looking forward to what he's going to be doing at the MPA when he assumes office on the 1st of July, taking over from Hassan Tampoli. You're watching The Marketplace. We're taking a short break. We'll be right back. Welcome back to The Marketplace. My name is Darrell Kwao. We can do some other news now. The Public Interest and Accountability Committee has reiterated the call for a national development plan to guide the usage of oil revenues for development projects. Now, speaking to Joy Business, technical manager of PIAC, Mark Ajiman, said a well-coordinated long-term policy framework will ensure that citizens enjoy the economic benefits from oil revenues.
The project is there, but then the project is for the regional feeder roads departments. When we were entering that, we saw the project, but then because there was no signboard labeling that this project is funded from petroleum revenue, you can identify the project as such. So, clear, visible identification of projects, whether through signage, whether through forum, whether through any other means, for people to know that these projects are funded from oil money, will be welcoming going forward. And also, we have stated in our 2020 annual report that the default position of the PRMA is for the state to spend petroleum revenue through a long-term national development plan. Now, because the law is developmental in orientation, it gives 12 areas that in the absence or while we are putting together a long-term national development plan, we should select up to 4 areas from a list of 12 and spend petroleum revenues through for a medium term, that's the 3-year period. But if you carefully look at the priority areas, the 12 priority areas, more or less it panders to political party manifesto. Yeah, instead of what a long-term national development plan will have done, because a long-term national development plan, almost every political party will couch its manifesto around that long-term national development plan. So that's why we at PIAC, we are calling for a long-term national development plan. We should go back to the basics as the law envisaged, and then have a long-term national development plan in place that will guide the spending of petroleum revenue. Probably if we do that, the narrative will change 10 years from now as to the reason why citizens are not seeing the economic benefits or the economic impact of petroleum revenue after 10 years of production and managing this revenue. The plan from the outset should be owned by the citizens. It shouldn't be owned by a government or political parties. It should be owned by the citizens. And in that, I mean that even the composition of the committee that will oversee the drafting and putting together this long-term development should be impartial in nature. It should be the membership of the constitution should be the broad spectrum of the Ghanaian society. There can be political party representation, but there should also be the ordinary citizen representation on that committee. There should be consensus building. Yes, there will be compromises here and there. But then if we do this, if we adopt this approach, no political party will come to power and see the long-term development plan as the product of a certain political regime, because it will have been the vehicle that will have carried the production of the long-term development plan will have passengers from all broad spectrum of the Ghanaian society. That is the way forward.
To one of our top stories this afternoon, the Ghana National Petroleum Corporation says it will continue to share needed data with the Ghana Maritime Authority as a means of securing a sustainable maritime space. Now, speaking at the 100th celebration of World Hydrography Day, Deputy Director General Dr. Poku Dankwa noted their contribution is expected to also go a long way in assisting the authority to become, to both secure and sustain a well-developed maritime space as a means of curtailing unwanted traffic which impedes effective maritime trade.
Government's energy policy goal is to sustainably develop and manage Ghana's oil and gas resources in a transparent and environmentally responsible manner for the benefit of every Ghanaian now and in the future. GNPC and our partners have most of our activities within the exclusive economic zone, marine environment, with 3 producing fields and an additional one which is up and coming. Development all offshore, the role of the marine environment, and for that matter, hydrography in the Ghanaian economy cannot be overemphasized. We recognize the need to have a secure and sustainable, well-developed maritime space in which our assets such as FPSOs, pipelines, wells are all well mapped out and secure from unwanted marine traffic and other activities. GNPC believes in the work and activities of the National Hydrographic and Oceanographic Committee, hence contributes to it by providing marine and engineering expertise. GNPC, we do this by sharing derived bathymetry data.
All right, let's talk about food matters before we conclude our show this afternoon. The National Food Buffer Stock Company is calling on government to support in building food reserves to ensure that the country is food sufficient. It believes this will make Ghana a major supplier on the international market. Now, according to Chairman of the Finance Committee, Dr. Emmanuel Sarkodie, this is the way to go to attain food security. The National Food Buffer Stock Company called on government to prioritize building food reserves. This, it believes, could make up for dollar reserves as it will make Ghana a major supplier on the international market. Addressing the Minister for Public Enterprises and his entourage on a working visit to the company, NAFCO emphasized that Ghana having food reserves is the way to go to become food sufficient. Dr. Emmanuel Sarkodie is chairman of the Finance Committee of NAFCO.
Just as we hold stocks for petroleum, which is called BOST, it's important that we hold stocks for food as well. And our funding requirements is quite huge. However, it is not unsurmountable, it is seasonal. So our recommendation to government was to have some agricultural bills and bonds that are tradable on the exchange. Instead of holding our reserves in dollars. We can hold some of our reserves in food. So government underwrites these bonds for us, which are tradable things that we can go on the exchange.
Deputy Chief Executive of NAFCO, Kofi Amoako, revealed that his outfit currently holds 2,750 metric tons of grains for the Economic Community of West African States. According to him, this is part of ECOWAS's strategy for food sufficiency in the sub-region.
If there was any food crisis, by the time food relief, that has been the usual practice for food relief to come from donor countries, Europe and the Americas. It takes a couple of months, 2-3 months for the food relief to get here. So ECOWAS, in their wisdom, decided that they were going to hold food reserves within the sub-region, and the European Union helped to fund this project. In our warehouses in the northern region, it's mainly grains, rice, maize, millet, and sorghum. We hold about 2,750 metric tons of these grains for any emergencies that may happen.
Minister for Public Enterprises Joseph Kudjo said his outfit would embark on continuous supervision to ensure that state-owned enterprises are profitable and pay dividends to government.
Let's look at how private sector companies end up operating profitably. Largely, the owner keeps an eye on them. On the other hand, the state-owned enterprises, the owner, which is GOG, Government of Ghana, hasn't kept that much eyes on them.
That story ended the marketplace this afternoon. My name is Daryl Kwao. Thanks for watching. We are leaving you with today's episode of Manila.
On Money Lab today, we continue our discussion on funding options available to micro, small, and medium-scale enterprises. In our last edition, we spoke about angel investors. For today, we are going to be talking about venture capital funds. These are funds that are normally set up by investment banks or even by governments, and they provide funding for startups. In Ghana, we have the Venture Capital Trust Fund, which is set up by government and provides funding for startups in Ghana. This normally comes in a form of money for you to inject in your capital. It can also come in a form of technical expertise or managerial expertise. Normally, venture capital trust funds want to ensure that you have growth potential in your business before they inject capital into it. Join us in our next edition as we conclude our discussion on funding options that are available for companies.